Hey everyone, welcome back to Corporate Decoder, the place where we look under the hood of big companies and see what makes them tick. Sometimes it's shiny, sometimes it's a bit rusty. Today we're going to decode an interesting report from the Federal Home Loan Bank of Dallas, and let me tell you there are some new debts being issued that might tickle your financial fancy if you want more of these direct breakdown. Subscribe now and join our Discord community, linked in the description. So what is the big news here? Well, the Federal Home Loan Bank of Dallas, or the bank as they like to call it, has been busy in the capital markets. They get most of their money by selling debt instruments called consolidated obligations. These are basically bonds and discount notes that are the shared responsibility of all 11 federal home loan banks. It is kind of like a big group loan where everyone backs each other up. Now, for the juicy part, the financial tables. This filing is about upcoming debt issuances, specifically consolidated obligation bonds, that the bank is committed to issue. They are laying out the details. For us to see, they've got a few of these lined up, all with trade dates of the 18th of September 2025. Let's look at the first bond here. It is a $10 million issuance with a maturity date of December 2029. This bond has an optional principal redemption feature, which essentially means the bank can choose to pay back the money early if it wants. Now that's interesting because it gives them flexibility, but it can be a bit tricky for investors depending on the timing the call style. Here is Bermudan, meaning they can redeem it on specific recurring dates. Not just any day, this particular bond has a fixed rate of 3.650%. It is a straightforward kind of debt. Then we see a much larger issuance, $50 million also, with a trade date of the 18th of September 2025. This one matures in September 2027 and also carries the optional principal redemption feature, meaning the bank can decide to pay it back early. The initial coupon rate is a bit higher at 4.020%, and it is also a fixed rate bond. It's a significant chunk of money they are raising. The third bond listed is another $10 million issuance, again traded on the 18th of September 2025. This one has a longer maturity going out to March 2029. It also has the optional principal redemption feature and a Bermudan call style. The rate is 3.900%, also a fixed rate bond, so we see a pattern here. The bank is issuing medium to long-term debt with the flexibility to call it back early. It is important to understand these rate types and styles. When they say fixed, they mean the interest rate stays the same for the life of the bond unless something very specific happens, which is noted in the terms constant. Means the rate is just plain constant, no changes at all. They aren't issuing any variable rate or stepped rate bonds in this particular batch of commitments, which simplifies things for analysis right now. So what does all this mean for the Federal Home Loan Bank of Dallas? Well, they need money to operate, and lending money to their members is their core business. Issuing these consolidated obligations is how they get that funding. The fact that they have optional redemption means they think they might be able to refinance this debt at a lower rate in the future if market conditions allow, or they might just decide to pay it back. If their cash flow is exceptionally strong, it's a strategic move to manage their borrowing costs. Looking at these specific issuances, they represent a commitment to raise a total of $70 million from the market. Very soon for the bank, this is standard practice for them, but it's always good to see the details of how they are staying funded. I think the key takeaway here is that the bank is actively managing its debt portfolio to meet its funding needs and potentially optimize borrowing costs. The fixed rates make it predictable for them and for those who are buying these bonds. Now let's dive into the bigger picture and my take on all this. The Federal Home Loan Bank of Dallas is a government-sponsored enterprise, so it's a pretty stable entity. However, like all financial institutions, they are sensitive to interest rate movements and market conditions. The fact that they are issuing these bonds with optional redemption shows a forward-looking approach to debt management. The amounts listed are substantial, but for an institution of this type, they are in the normal range of operations. There are no major red flags popping up here. It's business as usual in terms of their funding strategy. One thing to keep in mind though is that these consolidated obligations are not guaranteed by the US government. They are backed by the financial resources of the federal home loan banks themselves. So while they are government sponsored, they carry the credit risk of the banks themselves. This is a crucial distinction for anyone looking to understand the inherent risks. In conclusion, Federal Home Loan Bank of Dallas is continuing its robust debt issuance strategy to fund its operations. The details provided in this report highlight specific bond commitments that are fairly standard for the institution. There are no immediate signs of distress, but it always pays to keep an eye on their overall debt levels and how they manage rising interest rates or economic downturns. The transparency in reporting these commitments is a strength. Alright, that is our breakdown of the Federal Home Loan Bank of Dallas's debt commitments. What is your take on these numbers? And what do they signal for the institution's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button Really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.